All right. Back to the action here tonight. Tuesday evening, after all. It's, of course, August 25th, 2020. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, my job tonight is to help us find the best entry setups for tomorrow. That's Wednesday's trading session. And I got a great video in store for you guys and gals tonight. The charts are already in the background, as you can see. Got the oil, got the gold, and we got some E-minis on our radar for tomorrow. Boy, Wednesday setting up to be a bit of a challenging trading session. Got some big moves on the charts here tonight, but we got the E-mini and the oil right up around those highs, and gold looks like it's ready for a nice deep pullback. Got a lot to cover tonight on the video. Before we jump in though and get our hands dirty on these charts tonight though, I just want to make sure to remind you guys, make sure you subscribe to this YouTube video. So don't forget, subscribe if you've done so already. I don't want you guys to miss all the good stuff we publish every evening on this video. And don't forget, if you guys have any questions at all, drop those questions in the comment section below for me. And as always, I appreciate you guys tuning in every evening. If you're like me and you rely on this video newsletter to get your mind right and get those charts right for tomorrow, hit that thumbs up button for me. Always appreciate you all tuning in every evening. Subscribe if you haven't done so already. Drop those questions in if you have any questions, and thumbs up if you guys love the video here tonight. But speaking of the video, let's get to the chase here tonight, Joe. Let's grab a look at the calendar for tomorrow. We'll kick off this video right by checking out the calendar courtesy of Econo Day. Tomorrow, of course, is a Wednesday morning. Let's take a look at what's on the schedule here for tomorrow. Now, of course, just to remind you guys here, we are going into the end of the month, right? So end of the month, end of the summertime season. Now, we've got about 2 weeks left of the summer, right? We're not going to be finished up with the summertime season officially until Labor Day, which is not this weekend, right? But the weekend following, right? So be aware of that. As we look at the rest of this week, though, we know we're going into the end of the month. That means increased volatility. We also know the kids are going back to school here, which means we're expecting to see a little bit of distraction in the markets that usually leads to some lower volume. So as we mentioned last night, when you combine back to school with the end of the month, you've got a relatively low volume but high volatility environment, which leads to, well, exactly what we're seeing here today. Big moves up, big moves down, big moves up, big moves down. Lots of whippy volatility as we go into the end of this week. So that means we're watching for deep pullbacks, watching for traps, watching for failures. We'll put all of this stuff together, of course, right in the context of each market here once we get to our charts. But that's the overall condition, right, of these markets right now. End of the month volatility, right, and back to school as we go into the end of this summertime season. Now, we got some big news today, right? Well, we heard a bunch of updates here today. We heard about a U.S.-China trade deal meeting that went very well at the White House here today. I believe it's the White House. I'm not sure exactly where that meeting was actually held, but we did hear some pretty good news today regarding the U.S. and China, their trade deal, right? They had their first kind of official meeting for implementation on that. Everyone was kind of walking on eggshells thinking about, would both parties be playing by the rules? It does sound like everyone is keeping it together with the U.S. and China trade deal. We also heard about a new hurricane, right? Hurricane Laura is now barreling down towards Texas and Louisiana. Whenever I think about a hurricane, I think about crude oil, right? I think about natural gas. I think about lumber. I think about, building materials, right? I think about Home Depot. I think about Lowe's. So there's a lot of things that come into play around a hurricane. And of course, we saw a really big, nice new home sales number, really surging here. Fourth month in a row of very high home sales here. So there was quite a bit of news that came out today. It's not just the end of the summer. It does sound like they are, right, they are implementing that U.S. and China trade deal. How much will that hurricane, right, how much will that impact the markets here as we go into the rest of this week? You can definitely think oil, and again, a lot of other markets be talking about tomorrow morning in our trade room. And of course, right, the new home sales number continues to be a buoy for these markets as well. So a lot going on here right now. It's not just the end of the month. We got a lot coming into this week here as we go into the end, or the middle to the end of this week here, starting off tomorrow. Now, speaking of tomorrow, what's in the schedule here for tomorrow? Tomorrow, of course, is Wednesday. It's August the 26th. What do we have here on the schedule? We got some durable goods at 8:30. That's going to get us started nice and early tomorrow morning. Then, of course, we got the weekly inventory report at 10:30 Eastern Time. The big news tomorrow is definitely that durable goods order at 8:30 Eastern Time. You definitely want to be at your desk to trade the reaction. I would imagine around 9 o'clock, between 9 o'clock and 9:20, 9:30. I don't like trading the open, but, imagine, though, 9 o'clock, 9:15 tomorrow is where you're probably going to see the best setup in the wake of that durable goods order. And then as we go later on in the morning, you've got your weekly petroleum status report. Please don't forget, that reminds me to sit on hands tomorrow for oil trading between 10:15 and 10:40, right? That's our cutoff here on a Wednesday morning. So 10:15 to 10:40 is that kind of lockdown, that blackout period, only for oil, right? This is the petroleum status report, the weekly inventory report at 10:30. So keep that in mind tomorrow as well. So how much will the hurricane impact oil tomorrow, right? How much will this U.S.-China trade talk have an impact on us? Will we continue to see this risk-on, very rosy picture that we're seeing this data paint right now? Looks like the virus numbers are coming down. It looks like a lot of good things are showing up on our radar right now. Will that continue for tomorrow? We'll grab the charts and we'll definitely take a look at that right in closer detail here on tonight's video newsletter. Now, as we go into the end of the week, don't forget Thursday is the big day, right? Thursday is a day that's jam-packed. We get the GDP, the jobs. We got Powell speaking. We've got Trump speaking. That's his official speech, right, on Thursday at the convention, right, the Republican convention. And again, Powell speaking at the Jackson Hole Symposium, right? So Thursday is going to be a really busy, jam-packed day. And then Friday, we keep it going, right? We got durable goods, or should I say trade, right? And of course, personal income on Friday morning as we finish up this last full week of the month. So increased volatility, lots of big moves we expect. But of course, tomorrow morning, 8:30 and 10:30 news. Now, tomorrow, I will definitely want to be on time tomorrow morning in our trade room. We open up at 8 o'clock Eastern time every morning. What I'll do is I'll put a link for you guys to get registered so you can come out and trade this strategy with me tomorrow in the trade room. Grab that link. It's right in the description of this YouTube video. If you're on the blog right now, it's Sideways Markets. I'll put a big blue button for you right below this video tonight to grab that thing, right? Get registered and come out and trade this stuff with us every morning, Monday through Friday at 8 o'clock Eastern time. So now we've got a pretty good lay of the land for tomorrow. We know what the bigger picture looks like here this week. We know some of the factors that are playing into the rest of the session here for the week here. Now let's grab some charts. Looking at the chart tonight, got some S&P, we got some crude oil. And, of course, we got the gold here on our radar. Gold is looking pretty easy. Gold's looking pretty good here for tomorrow. Nice, beautiful spike and channel pattern on the gold. We'll grab that in a second. Oil, you'll notice here, oil is in a bullish spike and range scenario. That makes our job relatively easy for tomorrow. But with this hurricane bearing down right now on Texas and Louisiana, and there's a couple false tops on that oil chart. So we're going to grab a look at that in detail here in a moment. And boy, oh boy, that S&P, that big jump up, that really deep pullback, and now they're trying to make a retest of that high. Let's kick off the session here tonight with the charts over on the E-mini S&P 500. What do we know about the E-mini right now? Well, we know the market just took off like a rocket ship right out the gate. I mean, they didn't even wait for the U.S. session, right? Opened up in Asia, and the market just bought. I mean, obviously, people buying everything they could get their hands on. This is the type of risk-on stuff that we're seeing right now. And because the market is a little bit lower volume with back-to-school time of the year, this stuff happens, right? We get these big, dramatic moves. Well, obviously, the buyers didn't get very far, right? Because whatever happened overnight was not enough to convince the rest of the world that this was a good price to keep buying at. And the market, of course, collapsed all the way back down. Now, it took a while, right? The bears had control for most of the market here this morning until the bears, of course, tried once, tried twice, and failed for that big run back up potentially to retest those highs. So when I see this move, it's It's pretty much just a strong move up, a really deep pullback, and a nested failure, right, for a retest of those highs. My big problem right now is those highs are just a few clicks overhead, right? They're not very far overhead right now, and that really tells me I don't want to buy high up here, right? I want to buy. It's a bull market, but I definitely don't want to buy very high. So I have to find a way here to try to buy as low as I can here tonight to avoid, right, buying into those highs here. So what's the best strategy for this right now? How do I buy this market without buying too high? Because you can definitely see we are certainly bullish, right? There is definitely no doubt about that, right? I've got my one leg, my two legs, my three legs. We can definitely see that up there. So I definitely know I want to be a buyer. I know where these buyers are trying to go, right? They want to buy and take the targets off at those highs right now. But how exactly do I do this without buying really high? Well, it really all depends on the type of pullback that we get. You know, we talked, I believe it was, not last week, because we didn't do the newsletter last week, but 2 weeks ago, I put a newsletter out. We talked about the 3 types of pullbacks. Remember that from before, right? 3 types of pullbacks. What I'll do is I'll put a link up here for you guys. I'll put a little pop-up there, right, for those 3 types of pullback patterns, right? So if you want to go back and watch that video from, it wasn't last week, it was off on last week, right? But 2 weeks ago for the 3 types of pullbacks, right? We talked about that in a video. I'll put a link up there in the upper right-hand corner here for you. But the most important thing, though, is the 3 types of pullbacks. 1 is going to be a shallow pullback. 2 is a, relatively deep pullback, and 3, right, is a really, really deep pullback, right? There are 3 types of pullbacks. There's shallow, there's kind of medium, and there's really, really deep pullbacks. Now, these are really the key to our success tomorrow, is knowing that we've got this area of resistance, right? Area of resistance right up overhead. So if I see a shallow pullback, I don't want to buy too high up here. I'm looking for a trap to avoid that. I'll look for bears try once, bears try twice, and we'll look to buy with a trap on a shallow pullback. On a deeper pullback, I now want to get underneath the moving average, and I'll start looking for a seller failure pattern. So a deeper pullback under the moving average, I'll look for bears to get roped in so I can buy into their stop losses. If I see a much deeper pullback, a really deep pullback, well, now momentum is a big problem. Momentum is a much bigger concern. So now if we get a deeper pullback, now we look for what? We look for nesteds, right? We look for 1 try for the bears, 2 try for the bears, and then back up from there. So 3 basic types of pullbacks. We know we're bullish right now. We know the buyers want to get back up to retest that 48 high. They want to get up to that measured move. But what type of pullback do we get? Do we get a shallow pullback here, right? Shallow pullback, moving average, of course, right? Not too far below it. We look for 1, we look for 2, we look for traps, right? Very shallow pullback tells me I can't avoid buying high, so use a trap entry to get around that. If we see a much deeper pullback here, right, that will put us below the moving average. Bears will come in and try to get short off the EMA. Once they do, I know exactly where their stops are. I can buy right into those stops. I can buy into stops. I can buy the pullback on the way back higher, right? So, of course, failure into pullback combination. And then what if we really get that deep pullback? If it really gets that deep pullback here, now wait for bears trying once. Wait for bears trying twice. Once we get bears trying twice here, I draw that trend line up, right? I'm buying off the trend line. I'm buying into stops, right, for that rally going back up overhead. Overall, a very simple strategy here right now, right, on this E-mini. Now, of course, if the market keeps on pushing higher, be aware we may go sideways up here, right, into that range. If we do end up going sideways, keep your eyes underneath the range for a 2-try failure pattern. So if we do start to see the market go sideways up above these highs, keep your eyes open for a failure pattern below the low of that trading range. If the market really wants to blast, right, if it really wants to blast and it kind of holds on to a pullback here, we may see this market really jump with what we call a 1, 2, 3 breakout. If it really pushes higher off the moving average pullback, now I can mark up that high, I can mark up that low, and I can buy the first test off the low of that hidden channel, right? So we really got, a pretty easy strategy here on the S&P. It really just all comes down to what happens next, right? Do we see a shallow pullback, a modest pullback, or a real deep pullback? And you know, guys, I cover all of those entry patterns we've talked about so far. I cover all of that stuff in our free course. What I'll do is I'll put another link for you guys up top here. Again, there'll be a link up there for those 3 pullback patterns we talked about from 2 weeks ago. I'll also put a link in the upper right-hand corner here right now for our free trading course. The free trading course is don't let the word free fool you. It's a jam-packed video trading course. You'll learn all my favorite patterns. I'll send you hundreds of examples of how we apply those patterns to our favorite futures markets. So definitely grab that link that popped up. Grab the free course. And guys, again, as always, I'll put all of the important links, right, in the description of this YouTube video, right? So attend the trade room. I'll put that link down there. I'll also put a link there to register for our free trading course. Now, the one thing we haven't talked about here is how do we sell short? How do we sell this puppy short here on the S&P? There's 2 ways to sell it as far as I'm concerned. One will be a crown reversal. Right, we'll go up, we'll pull back once, we'll pull back twice, and we look for that trap high above that swing. We call these crown reversal patterns. They're very reliable. They take a little bit longer than you might think they will to trigger, but they're a very, very reliable pattern we look for in our trade room, right? So again, as we go up, now what I would do is I wouldn't go looking for the reversal until we get that retest of the high, right? But once we do get that retest of the high, buyers try once, lower low, buyers try twice, and that trap high for that short back down, that is something I'm watching here to be a seller for tomorrow. And of course, last but not least, would be a complete reversal, right? A strong move lower, a pullback to the moving average, and a jump off the moving average. If I can get a 1, 2, 3 reversal pattern, 1, 2, 3 reversal, then I can mark up that low, I can mark up that high, and I can trade the short off the high of that channel, right? So 1, 2, 3 reversal, and then selling off the top of that channel. Now, I mentioned earlier, or maybe not mentioned earlier, but you notice I left a little range on this chart down here. One thing I am watching for here would be, let's just say the market just simply collapses back down and starts going sideways inside this range here. If the market, for whatever reason, kind of loses its grip and collapses back down inside that range, it becomes a bear market into a range. What do we do with a range? We sell above the high of a bear range like this. What's the favorite pattern? A buyer failure, right? We wait for the price to go up. We look for those buyers to come in and get long off the moving average, and we're selling into those stop losses on the way back down. Again, this is the same basic idea, right? If we got that move higher into the measured move, we sit here for a while, right? Then we look for those bears to come in, try to get short off that high, and of course, a bull market, right? We're not going to sell it until it turns, right? And we look for that buy going back up into that trading range. So now we get a pretty good plan here, I think, right? Looking for 3 types of pullbacks, right? On the pullback, do we go higher into a range? Do we go higher into a 1, 2, 3 breakout? This really all depends on what we get here in the next few minutes or next few hours here. Make sure you grab that link I mentioned earlier in the upper right-hand corner, either for that prior video lesson or for our free trading classes. Let's keep going though. S&P is looking pretty good here. Got the S&P all ready to go. How about some oil? Looking at oil here tonight. Now, when it comes to oil is in a kind of a similar situation here to the S&P, right? We had that big move up early in the session. We got that really sharp, deep pullback. And of course, you can see now the bears, right? They tried once, they tried twice, but it doesn't look like they're getting the same amount of push, does it? It definitely doesn't. And that's a really big clue because we saw how the S&P failed and ran higher. This one, it looks like buyers are like, you know what? We're too high up here. I don't think buyers, right? I don't think they want to buy this high up on the ladder. Not to mention, that's a pretty strong move down as well. So that might be an open loop down there, and bears may be trying to retest that low. If I take a bigger picture look here at the oil, if I zoom out a little bit further on here, I want you to see where we are right now, because we're right at that big high up here at 43.82. The next level above that is going to be way up at 45.46. We have a ton of open space, and the reason why it's a big open space here is because this is what that gap looked like way back in March, right? Seems like forever ago, but when the bottom fell out of oil, right, a number of months ago now, it seems like forever ago, this was the gap, right, that was left on that chart. 45.46 is filling that gap. Now, we're probably not quite there yet, but we know we do have a hurricane coming to the Gulf of Mexico right now, right? Again, Texas and Louisiana, right, are the ones being really affected by it most, right? The entire Gulf Coast, of course, will get a nice little bath from Mother Nature. But we got a nice little 1, 2, right? 1, 2, and 3, right? Going higher here. This one, of course, is not necessary to leave on. You can see, though, these are all very similar, right? They're all very symmetrical, as you can see right now. So we do anticipate these buyers are trying to make that move up at that 44.02 area, right? So we know where that measured move wants to put us. Who has control of this market right now? The buyers do, right? Buyers have control of this market. I want to be a buyer, right? Or buy at support in a bull market like this. The only problem I have is I don't want to buy as this market is running higher. This reminds me a lot of the S&P. It reminds me a lot of the fact that we need, probably 3 different pullbacks here, right? 3 types of pullbacks we can look for here right now. For example, I've got this trading range on here. I've got my trend line coming down. If I can get, if we can get a little shallow pullback here and see bears try once, see bears try twice, we might get a little trap low here. Again, it's a little bit aggressive on this, but that's why I'm looking for a trap entry. Right, it's a little bit aggressive on that. Again, you're trying to buy underneath that trading range, and again, you're trying to avoid buying high up here. Right, it's relatively high up here, and the best entry pattern to avoid buying high is always going to be those bear traps. Right, so a bear trap is definitely going to be useful on a relatively shallow pullback. If I see a much deeper pullback, not a lot deeper, but right, if I get down into this battle zone, if you will, right, now I can look for those seller failure patterns, right, into pullback combinations. These are always one of my favorites in the trade, where my failures into pullback combinations on a modest pullback, right? Nothing too crazy, but if we see a really deep pullback, again, there's kind of this open loop, right? Open up down here that wants to be closed at 42.77. If they really get that real deep pullback down to that area now we want to look for that nested, that 1 try for the bears, that 2 try for the bears. Again, I always like to look for, right, those bears to try twice whenever momentum shifts like that. Now, once we have that, now we know where stops are. Right now we know stops are sitting right above that high. I can buy off the trend line. I can buy into stops for that rally, making that run back higher. And remember too, a lot of times these deep pullbacks into these rallies like this, they really rip. So a lot of times they'll give you a deep pullback. They'll try once, they'll try twice, right, off of the moving average here. And what happens is when those bears get stopped out, the market just rips higher and it doesn't pull back all the way, right? If we don't get that pullback, look for a trap entry, right? These are very, very common little 2-try trap patterns, little trap. As long as I can get in below the low of that trading range, I'll be a happy camper there. So don't be afraid, again, on that deep pullback. Let the bears try twice, right? Absorb that momentum. And then as we go higher, look for a little trap low to kind of put a little cherry on top before the market runs back up to retest the high of the range and possibly all the way back up, right, to retest the high of day here today at 43.57. Now, what if the market keeps going sideways? If we keep going sideways here on the oil, there's really not much we can do with this inside of this sideways range. We'll still stay patient for that shallow pullback with a trap, right? Deeper pullback with a seller failure. Deep pullback, right, with that nested failure. Again, the deeper it goes, the more likely those bears are going to attack, and we want to make sure we absorb on that. So if we go sideways, there's not a lot of difference in the game plan for tomorrow. The hardest part is going to be the push higher here, because as we go higher, we're running right into not only today's high, right, but that top that we saw earlier, right? This is a very big area where I would imagine, yeah, you'll definitely have some breakout buyers up there, but I would imagine you definitely have some buyers taking profit up there as well. So what I'm looking for here for tomorrow is I'm really looking for really two patterns here as the market goes higher. One pattern would be the easy one. This is the strong move up. This is the pullback to the moving average. Make them hold that pullback. Right? Make them actually hold that pullback. If they can't hold that pullback, because you know what's going to happen, right? It'll probably go up. They'll probably try to buy it, and then it'll come right back down again because of where we are, right? Nobody wants to buy high up there. Now, again, there is a hurricane coming down, right? There's a hurricane. So that definitely puts a little bit more bullishness behind the scenes here. So if we can get that strong move up, not too strong, but, relatively decent move higher here, pull back and show me that break higher. If the buyers can prove to me now what I can do is I can mark up that high, I can mark up that low, and I can look to get long off that first pullback. The first pullback is always the most reliable pullback off of that hidden channel, right? Again, we call these 1, 2, 3 breakouts into a hidden channel pullback. And then the second pattern would be, the second kind of break higher pattern would be a 2-try breakout. Again, we're inside of a range right now, so I have to see a lot of strength going higher here before I can be confident to be a buyer up here. So the second pattern to go higher would be a strong move up. This one's very strong. Then I look for that shallow pullback, that higher high, and then look for that trap low below that low. Now, as I always tell you guys, if we get a strong enough move in any direction, right, the odds are very good that we get that follow-up, that trap, right, to retest the high. The key is, though, is you want to get that shallow pullback along with that higher high. That's what sets up the trap. You'll notice back here, right, we never got that back here. Market ran higher and started coming down from there. No surprise, it eventually, right, pulled back and collapsed. So we do get that strong move up, that shallow pullback, and that higher high. Look out for that 2-try trap pattern, all right? So now we get a pretty good idea for how we want to buy this market tomorrow, right? 3 types of pullbacks. Do we get the breakout going higher, the 1, 2, 3 breakout, the 2-try breakout, or how about being a seller right now? Right? Could I sell this thing? It does seem like a possibility tomorrow, but I mean, with a hurricane bearing down on us right now, it doesn't seem like it's likely that we want to be selling this thing just yet. But I always be ready. Now, this is a good example of where I definitely would not recommend, or definitely will not be looking for a reversal because of the hurricane, right? So I'm not looking for that same crown reversal pattern that we talked about on the S&P, right? The S&P is right up around those major tops right now. I can consider a reversal pattern off those highs. Oil is both technically and fundamentally bullish right now, right, with that hurricane coming down the line. So we definitely do want to be careful trying to pick a top here on a market like that. So what's the best way to sell it? The best way to sell it would be, really there's 2 ways to sell this one. One would be they both include a reversal pattern, obviously. One would be a strong move down, then a pullback to the moving average, and a strong jump off the moving average, right? This, of course, is a 1, 2, 3 reversal pattern. 1, 2, 3 reversal pattern. It's very similar, right, to a big move down here. But look what happened, right? Big move down. Can they hold it? Nope. Didn't hold it. So don't think for a moment, just because you see a strong move down, you can sell that pullback, right? Believe me, the one that you take will be the one that fails. One you don't take is the one that'll go, right? Isn't that the way it always goes, right? So if you get that strong move down, nice strong move down again, I'm not trying to sell this just yet. I'll look for that 1, that 2, and that move back up, right? That nested failure pattern if we get that strong move down. But if those bears, if they can hold that pullback and make a nice strong jump off it, I'm game. I'll mark down that low, I'll mark up that high, and we'll look, of course, to sell the high of that new hidden channel. 1, 2, 3 reversal into hidden channel pullback. Now, we may also see the market make a run higher and then come over the top, right? It make over the top 1, 2, 3 reversal, right? That happens a lot. Mark that low, mark that high, looking for that short off the high tier, off the high here as well. So you can see it's the same basic idea. It's just we've got to see the market turn, and we have to see that momentum confirm off of the moving average. I'll tell you right now, these 1, 2, 3 reversals like this, we see this pattern a lot, where it'll run up, it'll hit the highs, and then for whatever reason, people go, okay, we're done, and they go 1, 2, 3 reversal on that, right? And that's when you want to look for that hidden channel top, because it's a great risk-reward ratio as the bottom falls out of it to usually go back to retest those lows. And again, like I mentioned earlier, I'll put all the links you guys need to register for the free trading course to learn those setups in the upper right-hand corner, and I'll put all the important links you need in the description of this YouTube video. All right, so that looks good there for the oil. We know how to trade it as it goes higher. We know to sit on hands if it goes sideways. We know the 3 types of pullbacks to buy the pullback, and we know how to trade the reversal. Boy, we are on a roll here tonight on this Tuesday evening newsletter. Let's wrap things up now with the yellow metal, the gold. Gold is probably the easiest, at least from my perspective, out of all 3 of these markets for tomorrow. Now, of course, right, we have a bear market, as you can see. I think that's pretty easy to see here right now, right? The bears have this thing tumbling lower here. This, to me, looks like a spiking channel. This to me looks like a pretty easy example of a spiking channel here. I've got 1 leg, 2 legs, 3 legs down for a triple measured move. Now they might have missed that measured move there by a couple inches. That's all right though, right? But they definitely have 3 legs down right now, and we definitely want to avoid selling too low here, because you look left, look where we are. We're right down around that 1916.7 low. If I really zoom out, you'll notice there's a lot of open space here. If the bears can crack below this 1916, next stop is 1900, and the big juicy target for the bears, 1874. That was before all this, hoo-ha, right? They got everything up above almost 3,000, right, a few weeks ago. So that 1874 level is a really tasty target for those short sellers. But I'm getting ahead of myself right now, right? The bears have to get a retest of this low here first. Look at the highs. You'll notice that big juicy target of the highs there, 1970.3 is a very attractive area here as well for the buyers. So we definitely have a pretty easy job at telling where the buyers want to get, where the bears want to get to. Let's put together our plan here. So we know it's a spiking channel. The one thing about a spiking channel is spiking channels by definition, just by definition, a spiking channel is a strong move down, that's a spike, that never really pulls back, right? That is ultimately what a spiking channel is. A spiking channel is a very strong move down. And what happens when you see a real strong move down? Sellers, they start looking for ways to sell nice deep pullbacks, but they don't get it. And they don't get it. And they don't get it, right? And that's what's going on, right? That is the kind of the mentality, that is the mindset of a spiking channel, right? There's this sense of, what's the word here? It's this sense of desperation, right? Sellers are looking at this going, come on, give me a chance. Pull back here for me, will you? And so that's what we're looking to do here tomorrow. Usually, the best place to look for an entry on a spiking channel is usually right up around the base of that channel and the first pullback. That's usually where. Now, sometimes it's a bit unrealistic. You'll see here on the gold chart, that big of a pullback might be a little bit unrealistic. So in these situations, I'll kind of scale it down a little bit, right, and look for a more modest pullback inside, just above those highs, right? Just above those highs here. That's where you want to keep an eye out here for that gold, right? So looking back at my chart right now, you can see there is the channel. Right? There is the channel. And so as we go lower and we start rotating lower, right, where's the first pullback? The first pullback's way up there, right? So you've got this kind of, again, it may go as high as the base of that channel, but that's kind of what you're thinking, right? You're thinking, give me a nice deep pullback so I can basically sell into the failure, right? Give me a nice deep pullback. Let's get buyers to think this thing's reversed. Let them try to buy that pullback and then sell into those stops, right? It'll look very similar to that pattern, right? Whereas we go up above the moving average, buyers come in and we sell it back down in, right? Same idea, except again, right, waiting for it here tomorrow morning. Now you'll notice I've got a couple levels of resistance I've found on this chart, right? We've drawn off our trend lines off the high. I've got my hidden channel off the high. What a great spot there to look for that short. So that's the general idea, right? I want to sell high as close to the top of this channel as I can get. I know it's a potential for a really big pullback on this, which makes me think maybe we should consider those 3 pullbacks, right? What were they again? Shallow pullback, modest pullback, deep pullback, right? Shallow pullback. Now, in all reality, this may trap high and may come right back down again. But the problem is, it's not a very high probability trade to get aggressive this late in a move like this, right? We're almost down around the measured move. So what's the best way for me right now to get short without having to worry about selling too low? I've got to look for a trap, right? Traps are my favorite entry pattern whenever I'm worried about basically selling too low here. And what it'll do is, right, we'll see a pullback. The buyers will try once. We'll go lower. The buyers will try twice. And we'll get just above that prior swing. This will usually be just above the moving average, and I'm looking for a nice, strong red candle in this case, closing below the moving average. Again, trap high. Right? Trap high. First of a pullback is a shallow pullback, right? And that shallow pullback tells me traps. Why? Because I'm trying to avoid selling low. Now, if we don't get that shallow pullback, if the market runs higher here, this is where the good stuff starts to come into play, right? This is where we can go out. We can look for those buyers to try to foolishly buy the first pullback. We know that the first pullback is not a reliable pullback for the buyers. Why? Because it's not a bull market right now. It's a bear market. So once those buyers take the bait, once they confirm, right, and they buy off the moving average, now we know exactly where those stops are. We can sell into stops. We can sell into the pullbacks, right? And we can run back down from there. So failure into pullback combination, target, of course, back down to retest those lows. Easy pickings on a modest pullback. But hey, what if we make that move all the way back up, right? What if this thing really cooks? I mean, in all reality, you could go like this, right? You could go out and really stack these things up here right now. And this could be another area of resistance, right? So make this a little bit lighter. If I can channel my Bob Ross, it's a happy little sell zone up there, right? It's a happy little sell zone up there. So now you got a new sell zone, right? Added on there. Maybe we get that high. It doesn't seem likely right now, but this is why I'm doing this. I'm doing this because I want to have a plan on my charts, in my journal, and in my head for how I'm going to trade this tomorrow. That way, I'm ready. And that's why you're here right now too, right? I don't know exactly what we're going to get, but I do know whatever we get, I will have a plan for. And I don't want to have to think this stuff through tomorrow while the market's moving. I want to plan my trades and then trade my plan the following morning. It's much easier that way. And of course, we do this together every morning in our trade room. So what if we jump in, right? What if it really jumps? If it really jumps going higher here, there are probably going to be 2 types of entries that you have to look for. One's going to be a nested, right? So real strong pull up, right? Real strong push higher here. Buyers come over. Won't be that strong, right? It'll be like that, right? Buyers will try once. Buyers will try twice. Again, I always like to draw that trend line down. Buyers try once. Buyers try twice. Nice strong candle here. I can sell off a trend line. I can sell into stops. And also, too, don't forget, a lot of times, these big pushes, when those buyers fail, right? When those buyers who try once, try twice, when they fail, this oftentimes runs lower on strength. Right? Because the buyers get stopped out, they're selling, sellers are selling, right? Everybody's selling, and the market runs lower. And so as the market runs lower, don't chase after it. Keep your eyes open for a trap, right? So it's a buyer failure, a nested failure, right? Into basically a 2-try trap. Buyers try once, buyers try twice. All right, very, very simple strategy there. Just going to wait for it. Right, so as we pop higher here, buyers try once, pull back, they try twice, draw my trend line, find my stops, I'm selling off the trend line, I'm selling into stops, then into that strong run, shallow pullback, lower low, trap high. Beautiful follow-up there for the bears, right? So 3 easy, pretty simple ways to get in after we have that nice deep pullback. There was one more, though, I mentioned. Whenever we see a really big pullback like that, sometimes it ends up being a 2-legged pullback. So keep your eyes open for a trend line coming over, and don't be afraid to use that trend line on the opposite side as a key area of resistance. Now, a lot of times what happens is on these trend lines is we get something like this, where it's a kind of a deep pullback there, then it goes higher here, and the trend line comes over like this. What will happen is it'll go 1 try for the bulls, pull up, 2 try for the bulls, right? You can combine that nested failure, and again, we call it a nested failure because there's a failure inside of a failure, right? It comes from those old Russian nested dolls, right? There's a doll inside of a doll. The term nested, right? That's what it means there. So if I can draw that trend line up, look for that trend line to incorporate for the entry. So some definite food for thought here as we go, right? As we go higher here on this gold. Now, of course, those are my short side setups if we get the pullback. If the market makes a run lower, I don't want to sell lower, right? I don't want to sell low. So if we sink back down to these lows, I've really got to make sure these bears get a strong jump off the moving average, right? None of this crap, right? None of that garbage. None of that, right, where it's strong move down, but it can't keep going, right? Show me more. Show me more. Keep going, right? They got to keep going there. So if they can get a strong jump off the moving average, now we know 1900 is on our radar. We can mark up that low, mark up that high, and look to sell short off the high of that hidden channel, right? Another option would be a strong move down, a shallow pullback, a lower low, and a trap high, right? We call those 2-try traps. And there will be lots of nuances like that we'll cover tomorrow morning as we kind of dive into the stuff, right, in the trade room tomorrow morning real time, right? So obviously I'll try my best to cover all the ideas here, right? But we'll do more information tomorrow morning once we get our hands dirty in the trade room tomorrow. How about a buyer right now? Can I be a buyer in this market right now? You definitely can. You definitely can. There's a major bottom down here, right? There's a major bottom down here. So I would have no problem with a crown reversal. Right? Bears try once, higher high, bears try twice. I'd have no problem there with a crown reversal, right? Market comes over, bears try selling once, bears try selling twice. Notice how this pattern sets up though. It's a 1 try and a higher high in a second try. That second try needs to be at least a double bottom of number 1. I like it to be a trap low because that will really, well, what it does is it'll get those breakout sellers involved. And then once this thing snaps back higher, all the bears who are already short, they're now stuck. Right? They're trapped on the wrong side now, and these sorts of reversals oftentimes will snap right back up to retest those range highs. So a crown reversal off that low is definitely an option here for us. We may also, of course, see this thing continue going higher, hold that pullback off the moving average, and jump right off the moving average. If we can get that 1, 2, 3 reversal pattern, I have no problem being a buyer, but I am not going to try to pick a bottom on this market right now. I'll wait for that 1, 2, 3 reversal. I'm going to mark up that high. I'll mark up that low. And remember, the first test is always the best test, right? First test is the best test as we buy off the low of that channel, right? So 1, 2, 3 reversal into a hidden channel pullback, right? And also, too, keep in mind, too, we oftentimes see those 1, 2, 3 reversals. And what ends up happening is we get those traps that line up with it, right? That little 2-try trap we talked about. This is a really common scenario where we'll see the market trap low off the low of that new hidden channel, right? That kind of combines 2 of those entry patterns that we've talked about, right? A 1, 2, 3 reversal into a hidden channel pullback and a strong move up, shallow pullback, higher high, and trap low, right? We've talked about those patterns a couple times here on this video so far. So again, target is back to retest the high. The big question right now is, what type of pullback are we going to see? Is it a shallow pullback, a modest pullback, a deep pullback? Do we go sideways? Do we reverse? I'll tell you one thing, we are locked and loaded though, no matter what we get here for tomorrow. So no excuses. Come out and join me tomorrow morning, every morning, 8 o'clock Eastern time, right? Don't let another day pass you by, and don't do this all on your own. I'll tell you, I didn't start seeing results I was happy with until I started working with a trading coach almost 15 years ago. One of the best investments in time and money I ever made in my trading career. I'd love to have you there, right there with me, looking over my shoulder tomorrow morning in our trade room. As I mentioned earlier, I'll put all the important trade room links in the description of this YouTube video, so grab that link in the description and get registered. I'll put all the free course links down there as well. And please don't be a stranger, right? Don't let my ugly mug scare you away from calling that toll-free phone number. I'll be here to answer the call there. Use that live support tool on the right-hand side to chat away with me here in the office. And most importantly, I hope you subscribed. I hope you hit the thumbs up button for me here tonight. And I hope you'll post those questions if you have any questions in the comments section below. And again, come out and join me tomorrow morning, 8 o'clock Eastern time, and we'll do this together. If I don't see you guys tomorrow morning at the opening bell, make sure you come back and see us tomorrow night on tomorrow night's newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.